Morning. It's about an hour before the market open. I'm going to go ahead and open up the stream to our private group. You should be able to see us now. Sorry for the delay, private people. So yeah, it's Monday. We got the CPI this week. That's a hot ticket. It's what everybody's looking at as far as what's going to happen with the interest rate, what's going to happen with the interest rate determines the price of money. And so when you're looking at how well markets are going to do, all eyes are on the interest rate. Now, why is that? Well, that's because money is debt, right? All money is debt. Money is a debt instrument. We've covered this many times on the Rogue Show. It's kind of something that if you've been following us over on Rogue and so on, and even on this channel, even on this YouTube channel, we've talked about how money is debt, the monetization of debt. It's been that way forever, but it's really been that way in a very poignant way since 1971, when we were officially taken off of the gold standard, okay, in the United States. But it's probably been that way for a much longer period of time. I would guess certainly since 1913, and in many ways before that. So anyway, the more expensive money is, then the more expensive it is to cram money into investments that require said cramming to keep them afloat. Well, what does all that mean? We're going to get to that. First, go ahead and take a look at the website there on the screen. You got the QR code. You can zap that, take you over to our website, or just follow that web link, not link, but the URL that you see, tap that in, and it'll take you to our website to show you what we do. We help people become traders if you want to start trading in markets. Of course, we don't offer any investment advice. So before you risk your money on markets, you need to talk to a licensed investment advisor, because risking your money on the markets is risky. You can lose your money doing that. So you want to talk to somebody professional with a license before you do that. Okay, so all that stuff out of the way. We're going to take a look at the upcoming week, and we're going to take a look at what may happen to the markets, and then we'll see if anybody in the audience wants to see any particular chart. We got Brad King. Morning, mate. Yes, morning to you, Brad. I'm glad you can make it. You had something that you wanted to cover. Is that right, Brad? Did you have a question or something that you wanted to cover on the show for the beginners? Was that you? If so, go ahead and pipe up and let me know what that was. Valley Girl, Merry Monday to you as well. Yes, Merry Monday to all of the marvelous traders out there. I love having everybody on. I'm just going to go through my private messages here, because I thought Brad asked me to go over something. Let's see. And I think it was a good beginner type question. This is a beginner live lab. So this first 30 minutes of our day, starting at 8:30 EST, we will let audience members, whether you are a private member or not, you could simply just come on to YouTube. If you're not a private member, we can answer questions, but our private members do have priority, and we can do that. So Brad King wants to talk about using ATR to set stops. And yeah, Brad, I think you crammed through like 100 tests over the weekend or something crazy like that, which is just phenomenal. Getting through 100 tests, my hat's off to you. That's remarkable to get through 100 tests. That's somebody who really has some dedication, let me tell you. And Brad, if we start to cover that, and that for whatever reason goes over this live show, then we'll finish that up in the private show, and then I'll throw a clip on the YouTube so everybody can see it. Since we, if we start a concept on the beginner lab and it goes past the half hour, then I'll go ahead and make sure I do a clip and put that up on the YouTube so everybody can see. Okay, so that way everybody sees that kind of thing. We don't just cut the lesson off. So I'm gonna go ahead and jump in. We're gonna look at the week ahead. Probably give that just a once over, because it is information wise pretty small. And then we'll get into the ATR stops for Brad, because it's a really good beginner concept. Okay, so not much going on today in the news. Tomorrow we have claimant count change, GBP. I'm assuming that's unemployment claimants. So that'll be looking at British pound unemployment. So if you are trading the European Open on Tuesday, the London Open, I should say, then you're going to possibly see some volatility in the British pound at that time. Same thing on the Wednesday Open. There's the GDP month over month, so a change in their gross domestic product. Now Wednesday is there might be some volatility in the pound right then, but then I think it's going to be pretty quiet. In fact, it might be pretty quiet for most of Tuesday because the USD CPI, we were just talking about at the beginning of the show, where we're going to see what the official inflation number is. Whether or not that's real matters not. What we look at is what the number is. We don't want to get into philosophical discussions or even data-driven discussions on whether or not this is fudge data or not. It really doesn't matter when it comes to trading. Okay, so these numbers that come out the market will react to them in a certain manner. And so what we tend to do, or at least what I tend to do, is I wait for the market to digest this data before I go trading, because a lot of times these data can be used to manipulate markets and knock people out of their trades. And the people who get knocked out of the trades tend to be kind of the retail traders such as myself, people who are, I don't know, using less than $10 million or whatever your number might be. People who are pikers. That's the term for somebody who's trading their own money, or maybe a small proprietary fund. So that said, Valigro, the gorilla, is feeling better. He's going to jump on at 9. So we're going to have the gorilla for the private show. He must be feeling good enough to come on, which is just great. We're really happy about that. So furthermore, in the week, Aussie dollar, this is my time, 7:30 p.m. So I think that's going to be 9:30 a.m. You have the unemployment data for Aussie, 9:30 a.m. In, say, like Western Australia time, so maybe 10 or 11:30 a.m. Sydney time, I think. And then you have the afternoon in Europe, it appears. They're going to talk about basically their own version of FOMC. There's a lot of data coming out on Thursday. Thursday is going to be choppy waters until 8:30 a.m. EST, because you have the ECB press conference is going to happen at 6:45, so I might kind of stay away from the euro. But you're going to have a lot of data coming out for USD. PPI, which is about as significant as CPI. This is producer-related inflation. We talk about that once a month. You could probably roll back to same time last month to get more data on what that means. I don't want to spend a lot of time on that today. Also, retail sales, which of course sales is going to be an indicator of the economic strength. And again, we don't care about the real data. What I mean to say is we don't care if this data is fudged or not. We just look at the data as it's presented and trade accordingly. And I personally wait for the data to be, released before I trade. I let the market just digest it a little bit and let let everybody play around and position before I go ahead and establish a trend and trade for that. And then you got Friday also, Empire State Manufacturing Index. People are watching manufacturing right now, so this could have, as you see that red envelope there, some heavy impact. So that's going to be 8:30 a.m. EST on Friday. And then you have consumer sentiment at 10 a.m. on Friday. So Friday might be some funky trading because you got data all through the open, and I tend not to trade, after, say, noon EST on Friday. So Friday might be kind of a slow day. And then those of you who know what's going on, I may not, we might take a day off this week, a day or two. We'll see what happens. Those of you in the private group know I have some, some personal items that are here. So you all know what that means. All right. So let me see here. Brad King in the private chat said, morning all. Has anyone had issues setting up demo account on Oanda MetaTrader 4? Was trying to set up, but I can't connect to MetaTrader 4 for some reason. Frustrating. So look at it again tomorrow. I haven't messed with MetaTrader 4, but I'm going to actually be all over MetaTrader today. Doing some doing some connection for my algo for some automation testing, that kind of thing. So, and a demo account is going to be part of that. So if I could get any data on that for you, I will. But for now, I'm going to go ahead and just jump right into the ATR conversation because, that is pertinent. Okay, so let's take a quick look. I have a trade on for USD CAD that seems to be going pretty well. I threw this on prior to market open. It's a relatively small trade, but you can see that it is going pretty well. I have a pretty relatively wide area for this to go because I think that we might see a little bit of a bounce in this area, which is why also that it is a small trade. Small trade for two reasons. One, it's pre-open. And I tend not to put on a lot of money pre-open, pre-Monday open especially. But I think we might see something like this. And if I can get a survival of this bounce, and then wherever this bounces, if price can break beyond that, then my stop will go to even. My stop will go to, not break even, but my stop will go to entry, permanent profit. So we'll see how all that goes. But the trade's well at a profit now. So I didn't put it up on Algo Factory because it is a pre-open trade, and it's just a little bit risky, and I didn't want to give anybody any ideas. I put my trades up as I take them. We're not a signal service over at Algo Factory. You're not intended to follow my trades. I just put them up for educational purposes only. So let me roll over to a different chart so we can discuss ATR-based stops. In fact, I'm going to go to a different layout. Give me just a second here. Let's see. Okay. I'm going to try to find our friendly chart. I think this will be it. No. Here it is. Okay, so looks like I was working with was that, whose algo was this? Was it Trev? I don't know. I think it was. Let's see. Well, let's go ahead and delete this guy here. All right, so let me add. We don't have any indicators on here yet. So the question was how to use ATR to kind of for a stop loss. Okay, so we've talked a lot about stop losses, so we'll briefly go over that because this is the beginner course. But let's just say that I expect price to see. I'm looking at this. I'm going to go to a higher time frame just because of the way this chart is acting. Okay, so let's say that I expect price. I'm going to do some measurements here real quick. I'm going to look at this as a high time frame move down, and I'm going to say that I'm exiting here. Just some real quick and dirty trade measurement, right? So let's say that I want to enter a trade right here. Let's say my algo says go right where price is right now. Okay, and I'm counting on the price to head up to here. Now maybe it goes, it doesn't look like what I just drew. Maybe, let me zoom in, by the way. Hold on. Make it a little easier for people to see all the numbers. Okay, let me delete that and let me expand this. And okay, back to it. So yeah, let's say that I expect price to head, maybe it'll kind of pull one of these and then like this and like that. Okay, that's what I expect the price to do. That's what my algo says it's likely to do. It might take a slightly different path, but that's the plan. So I'm going, but it could maybe even come down to here, right? So I want to make sure I protect my trade. And anytime I take a trade, I use this long position box for if I'm going long. If I'm betting on the price going up, I use what's called a long box. There's also a short box. So let's just say I am betting, I don't know, it's not the word I like to use, but let's say that I am risking that the price may go down. I would use the short position box, but I'm risking the price is going up. Okay, so I'm going to put the box tool right here. Okay, and I have this area where if price heads down, I'm losing money, right? If price heads up, I'm making money. Okay, that's how this box works, right? And I've done my math and I've done all my measurements, and I think that I'm going to exit the trade right at this blue line. So I'm going to extend the green profit area to that blue line, right? But how do I determine where I'm going to exit the trade if it goes against me is the question, right? So what does that mean? Well, oh, look, anytime I take a trade, there's always a chance the price is going to go against me, right? And so we're not going to really go too far into stop losses and all that. If you could always look up what's a stop loss. That's a super basic concept, but what it means is that if the trade goes against me, I want to get out of it before it does too much damage. And you'll notice that there's a ratio here. You can see it on the screen. It's right now it's 2.31. And so let's just pretend my stop loss was right here. Let's say I did the math. I used an ATR, which we're going to demonstrate. It's not going to be exactly this, but it may look a lot like this. But let's say that this is the number. Well, that means that I have 2.31 times the amount of profit compared to the amount of loss. So if the price goes against me and I exit the trade, and let's just say I risk $1,000, right? Well, I lose $1,000. But if the price goes in my direction and I exit the trade at the top of my original profit plan, then I make $2,300, really $2,310, because you have a risk to reward ratio of 2.31, you see. So you see how the green box is 2.31 times the size of the blue, which is my risk. Now, most of the time, people are going to have this coded as red. Okay. So, for example, in my current trade that I'm in, you'll notice I have about a 2-to-1. So I flipped over right now on the screen to the USD CAD, which is my short from this morning, and I have a 2.19 risk to reward. So if I had risked $100, then I would be making $219. Or if I risked $1,000, I'd be making $2,190. That means that if the price goes and I get out of it, if I automatically exit with what's called a stop loss, I lose 1,000. But if price goes to my target all the way, then I make 2,190. Okay, so that's how stop losses work. Okay, so in this example, what we're going to do is we're going to use a stop loss. We're going to use what's called an average true range, and we're going to use that to determine where I want to exit this trade. And a lot of people, look, first of all, when you look at the market, there are pivot points, right? And pivot points respect past pivot points. So for example, you can notice if you're on an uptrend, let's go to the past here. We're going to go back. If you're on an uptrend, and let's just say back in June, I wanted to go long right here. Say Algo said go long, right? And, I determined I wanted to exit right there. Well, I can use these pivot points down here where price kind of came down and then came back up. Price tends to respect those past points, right? See how price came down and then kept going up? And you notice that there was one strong pivot point back here, way down low. See that? So looking at this pivot point down low and then price respecting that tells me that chances are price is going to continue not to go below this point. So I might put my stop loss a little below here, like maybe somewhere down here, right? So just to be safe. And then if my exit was right here, I'm looking at about, what is this, like 2.5 to 1? Oh no, it's a 1.85 to 1. That means I would lose 1,000 or make $1,850, right? So I'm tipping the odds in my favor such that if I lose a lot less than I win. Okay, so how do we determine where to put this stop loss? How do we determine where the best place to exit the trade is if it goes against us? Well, I can tell you how I do it. You're gonna have to do your own research and do it your way, but I will share how I do mine. Okay, and well, how with some of my algos I do mine, because I have different algos with different methodologies. But this is a kind of a common method using what's called an average true range. Okay, so average true range looks back at all these candles, a certain amount of candles before it, I think 14, depending on how you set it up. And it looks at the average range of the candle from top to bottom, and then it averages that out. So you have an idea of how far these candles are going to go. And when you have an idea of how far these candles are going to go, then you have an idea of how far they're not going to go, right? So let's do the math here. Let's actually bring up the ATR. Okay, so you go to your indicators and you type in ATR, and this comes free with what do you call it? Trading View. right? Which is the software that we use for charting, at least that I use. You all might use something else like maybe MetaTrader or whatever that is, but I use TradingView. And I click on average true range. And that brings up an oscillator on the bottom of the screen that I'm going to code yellow just to make it easier to see. Okay, so what I do is I know if you look at this, it says ATR 14 RMA. That means that it looks back at 14 candles and it calculates the range. Okay, so just to briefly explain that, because there's not a lot of time, the range of this candle, this big wick blue candle right here, the top of it is here, the bottom of it is here. That range is going to be from 106.98, it's $1.06 and 98 thousandths, up to $1.07 442, right? So however many pips that is, that's a certain amount of pips. It's going to be something like 18 pips, right? So 18 thousandths of a penny in this case. It's not always going to be that, pennies or whatever. It depends on what currency you're trading, but you're getting an average amount of distance that one of these candles can swing. And it's based on adding all 14 of the last 14 candles up and then averaging that out. Okay, that's what an ATR is. So what I do is I look for the most in this particular kind of trading methodology. It's not always the case. I look at the most prominent pivot point. Okay, the one that matters the most based on the time frame. So I'm looking at a recent low, right? And that's going to be down here at 1.06861. That's $1.06 and 86 thousandths. Okay. That's and we're looking at the euro versus the dollar, right? So we're looking at euro in terms of the dollar. So right now at this point in time, the euro is worth $1.07.27, right? So it's $1.07 and 27 thousandths of a cent. Okay. So at this point though, at the very low, it was worth $1.06 and 86 thousandths, which is 1.06861. So I know that is where the bottom of the swing was. So what I do is I look at the ATR as it is now, right? So I'll draw a line through that, see, and you can see that it is 18.4 thousandths. It's hard if I put my cursor on it, some things happen. So if you look to the bottom right, you'll see that it's 0.00184, right? So our bottom was 1.06861. Our ATR is 0.00184. So I bust out my calculator, which I will do on the screen here so everybody can kind of see. And then I take the low, which was 1.06861, and I subtract 0.00184, which is the ATR. 184, and I get 1.06677. So I will go ahead and recode this to 1.0, or get out the calculator and see that number again. 1.06677. And that's going to put that line back down here. It was up here, now it's down here. So I've subtracted the ATR from this bottom, and I've gotten this distance right here. And this is where my ATR would be if I'm doing a 1 ATR stop. And that leaves me with a 2.1 risk to reward ratio. That means that if I am risking $1,000 and price goes against me and I automatically get out of this trade by setting a stop loss, then I'm losing $1,000. I've limited my losses. Now, if price goes in my favor towards my target, and hits my target, then I would make $2,100 less commissions. So that's how a stop loss works. Brad, I know you're on watching, so let me know if that explains it, and then I'll wait for any other questions before we move on. We are getting pretty close to the end of the free to the public. Okay, good. Yeah, Brad says, awesome. Thanks for going over that. So I assume that you have a pretty good understanding of how that works. Now here's the thing. There's a little bit more, and maybe Brad, I'll go over this in the main group. because what I just showed you, that's on our website. That's in our, if you go over to the Algo Factory website, that data I just showed you, I'm about 99.99% positive is the subject of one of my videos. But I know it's always helpful to have it explained again because trust me, it's helpful. So I'm happy to do it. I'm not bagging on you for like, hey, I already said this. I'm not saying that at all. In fact, it's really good to see things twice. Jay asks, can the ATR also be used to filter chop? I bet it can. Trev, one of our guys who actually is teaching himself to code, severely impressed with Trev, one of our members, one of our private members is teaching himself how to code, and he actually created ATR channels. So an ATR channel can be used to filter chop in a way, Jay, because if you have an ATR channel around price, then you have areas that price is more likely to bounce. And if you're looking at chop, which right now, this area right here is chop. Chop is when price doesn't move very much. It kind of ranges a little bit. So if I were to bring out an ATR channel, and Trev programmed one of these that is customizable, but if I just, so if I brought an average true range channel, and it's just, 1, 2, and 3 ATRs, then you can see right now, let me delete some of these other items. What you can see here is that now that price is choppy, right? Price is less likely to go beyond any of these ATRs, which are shown by these gray lines, right? So from the current price, this first gray line, which is covered up by this box that I will now delete, that's 1 ATR up, that's 1 ATR down, right? So from current price, there's a good chance that that's the case. Let me do one other method here. Brad, I'm going to show you one more method for stop losses. Okay. So actually for a lot of my, and I'll give this one out for free. What I'm about to do right now is I'm going to give a secret for free on ATR stuff, right? On an ATR methodology. Instead of 1 ATR from the bottom of the most recent, candle, and that can be a little more to code than a coder may want to code, like if you're hard coding your algo. So I'm not going to do it here. I'm just going to tell you that after the end of this and in our private group, I'm going to show you all, and Jay, this is going to go towards your question on coding, right? So I'm going to show you all, as soon as I get off this, how I actually set my ATRs in a lot of my algos that I either am having coded now or intend to code. Okay, so that's coming up for our private members only, and that's going to be fun. So let me go ahead and do that. I'm going to put the QR code up once more. So, if you want to know more about what we do, how to find us, go to www.algofactory.tech. It's at the bottom of the screen. You can see the QR code. You can zap that with your phone, right? Or just type in www.algofactory.tech. $49.99 is giving this away for free. Just so you all understand, we have this low price while we're new. We haven't pushed out marketing yet. We haven't really marketed too hard. We're just kind of internally marketing. So we're kind of looking for groups of people to trust us with their time and money and giving them this very low price. We're going to raise this, and we have actually right now we have a set kind of methodology as to when we're going to raise that price, and we'll probably raise it from anywhere. We may double it, we may multiply it by 6. I know our competition's about $300 a month, so we understand our value is at least that because we give out more than our competition. I'm a freaking animal. I'm on here every day of the week that's not a federal holiday. That's a weekday. Not Saturday, not Sunday. I got to have a life, but understand that $49.99 is not going to last. So if you do get in at $49.99 and you do not let your membership lapse, then for this tier of membership, you will always have it at that price. You'll be grandfathered in. So, I would recommend hopping on if you're not on already. All right. So that's the pitch. Let me go ahead and shut off YouTube. We love you all on YouTube. Like, subscribe, follow, spread the link. By the way, we have an affiliate, we have an affiliate program. It's very lucrative. So if you do like what we do and think it's valuable and you want to share it with your friends, we can get you paid. It's one of the best affiliate programs I've ever seen. All right. So